This is the Real Estate Sit Down presented by Double B Homes. My name is Blair Berg, and today I'm joined by Drake Duckworth with New American Funding, who's going to talk to us about misconceptions about mortgages. Thanks for coming on, Drake.
Thank you for having me, Blair. Appreciate it.
Yeah, so give us a little bit of your background. What did you do before lending?
Before lending, I had a pretty similar story to your buddy Ian Howe. I attended college. I went to the University of St. Thomas, and I had attended for a couple of years. And then at some point, different things happened where, kind of just self discovered that um, wasn't necessarily the right time for me.
Okay.
And my parents, and my whole family have been in real estate for quite some time, and my brain had always wandered and thought about real estate, but truthfully, I never really wanted to get into real estate,
Okay.
and so it's kind of funny how I ended up here. But throughout my time at St. Thomas, I had a passion for entrepreneurship, loved working with people, loved the thought of like owning my own business and doing something that I had control over. And an opportunity opened up at Marketplace Home Mortgage as a marketing coordinator, and I was going to St. Thomas for marketing management entrepreneurship. So I'm like, seems like a good opportunity. So I jumped on that, and I became a marketing coordinator for a loan officer, Brian Sunder. And I mean, I can't be thankful enough for how that all lined up for me. I got my foot in the door in the mortgage industry, and eventually I, started originating loans myself.
Yeah, and your family's mostly they're realtors, right?
Yep.
So I'm sure they like having an inside guy on the
Yeah.
lending side.
Yeah.
Um, yeah, and St. Thomas, I mean, that's a good school to, if you're not going to finish there, probably a good idea to, like, when you decide, like, oh, I should probably step out because that can get expensive. And
Yeah.
I always think it's funny, too, colleges that offer, like, entrepreneurial degrees. That almost seems like an oxymoron. It's like, get a degree so that you didn't really have to have a degree because you can start your own business.
Mm-hmm.
So yeah, that's great. Started out market coordinating. What got you interested in actually lending? Was it just being partnered with Brian? You're like, hey, I actually kind of like his job more than I thought I would originally, or
I think it had to do with that. When you're young, obviously, one of the main things is your big why is I want to make more money.
Yep.
And there was more money in the mortgage side of things, but not only just that, I thought it would be just working with people and working with people on that financial endeavor, one of the biggest financial endeavors that they'll probably encounter throughout their lifetime. And so just being a part of that, I think, is what intrigued me. And then, once I was working alongside Brian and as, a loan officer assistant role,
Yep.
I realized that this is what I'm passionate about. I love, helping people realize and achieve home ownership especially when they didn't even think that they could do it, and
Yep.
a lot of people, they just don't understand what it takes, when it comes to owning a home. They don't know how much it's going to cost, where they start. It's kind of like a big limiting belief that they have that they can even achieve home ownership. And so I love kind of unraveling that for people and just kind of showing them the numbers and seeing, the look on their face when they're like, holy crap, I can actually, you know, I can actually own a home at this age,
Yeah.
and not even have to, spend all that much money,
Yeah.
And so, yeah.
Well, I think that's interesting too because I think in our space you deal with it so often that you think like everyone knows. And but really there are people who grow up that like their parents never owned a home. Their parents never owned a home. Like they just grew up renting. And I think they get to a point they don't realize how easy it is to actually get into a home. And I think
100%.
that's what we're going to talk about a lot today is just like misconceptions people might have about lending. Because I do think like we've been doing it so long that it's like it's very easy to lose sight. Like, oh, not everyone knows that. Like, and like I said, that's like kind of to transition into what I want to talk about right away. Something I always talk about with newer buyers, because around our age group, it's like sometimes it's first, second time home buyers. And when I ask, like, well, they say they want to own a home, but they're like, but I'm not ready yet. And I'm kind of like, well, why aren't you ready? It's like, well, I need to save up, or I need a certain credit score. And like, oh, how'd you come up with like that figure? It's like, well, that's just what I think. And then that's why I'm always like, talk to a lender. If your goal at any point is home ownership, talk to a lender. It doesn't matter what stage you're in right then. Talk to a lender so they can get you on the right track. I mean, am I kind of right in that thinking?
Oh
Or
yeah, yeah, 1,000%. A lot of the times with YouTube and all these videos and TikToks at your fingertips, everybody likes to think that they can become an expert, based on watching a 30-minute YouTube video. And I love the fact that we have information available at our fingertips. It gives us a lot of good things to go off of, but it's really important. That gives you a good foundation, which like I said, I'm all for doing your own research and figuring things out at a surface level, but it'll never be, um, you know, in, enough information for you to make that decision and at least be confident about it, And um, so, yeah, I mean, even for example, somebody might go on YouTube and say, oh yeah, I need 20% down payment. I need, uh, this, that, and the other, you know, as opposed to talking to a local lender who actually understands, everything that we have to offer in the state of Minnesota
yep,
in terms of down payment assistance even at a county level or a city level, and so those are big things that people don't really look into. And so they're just kind of like have it in their head that, yeah, I got to wait, I got to make sure my FICO score is up and over, 700, or I have to make sure I have, $20,000 in the bank. So those are some of the things that people kind of set themselves up for failure, already attaching these kind of limiting beliefs in their head, and, just kind of crossing off home ownership before they even get started, or, really talk to somebody like myself.
yeah. So I mean, that's a great point too. And right away, I think that's another one that you're talking about, social media, information being readily available at everyone's fingertips, where I see it so much that I assume everyone does. But again, I have to remind myself my algorithm is different than everyone else's. And that's the 20% down thing.
Mm-hmm.
And I think I talk to buyers almost weekly who still don't know you don't need 20% down. And like I said, my algorithm, I'm bombarded with TikToks of realtors saying like, you don't need 20% down. You can get down. Yeah.
Yeah.
And so I'm like, well, everyone knows that. But then I got to, yeah, like I said, we live in kind of a vacuum where it's all real estate. So talk about that a little bit. So you don't necessarily need 20% down. What is like the lowest down payment you can have, or like what programs help with that?
Yeah, for sure. Yeah, this is a good topic to talk about. You know, I would say the standard when it comes to the minimum amount of money required on a purchase is 3% or 3.5%. Those are the two standard programs. 3% being with conventional, 3.5% with FHA. And we can kind of get into the differences between those
Yep.
programs later. But that's kind of what you're going to see, especially for first-time home buyers. That's the standard. There are 1% programs out there. We kind of touched on that, just between you and I in our discussions. That's kind of a marketing gimmick when it comes to 1% down. If you're looking at $200,000 purchase price, maybe you can technically do a 1% because they'll match up to like, $4,000, and then it actually would come out to about 1% down for the buyer.
Yep.
You just don't really see that happen, just because there's income limits and all kinds of different things that really limits that buyer pool. And then on top of that, then you have Minnesota housing down payment assistance, which kind of convolutes things a little bit too, because you can still technically have a 3% down payment or even a 3.5% down payment. But really, you only have to come into the transaction with that minimum $1,000 investment, depending on the purchase price, of course.
Mm-hmm.
But, when we're talking in those terms, it's really not all that much money, especially at $350,000 purchase price.
Yeah. And I think, and I know you kind of touched on a little bit, you're talking about like Minnesota specific programs, and you said even county, city can really have different programs.
Mm-hmm.
And I know we've worked with some out of state buyers who they can't afford where they live, but then they're surprised to discover the different programs we have locally. So,
Mm-hmm.
I mean, that's for anybody, no matter where you live. That's why you need to talk to a lender, because they'll know all the local aspects of it where a big national lender might not be able to,
Mm-hmm.
which I always say try and go local if you can. Ideally, go with who has good customer service because points, fees, all that stuff kind of balances out, I think. But
Mm-hmm.
um, so going local is always good because they can give you that local information that not everyone has, and it's easy to keep that misconception that you can't afford it if you're not talking to the right people.
Yep.
And you touched on it a little bit, conventional FHA. I know kind of where we live, it's a little bit bigger because if you go like a city south of us, you can start getting qualified for USDA loans.
Mm-hmm.
Talk a little bit about the different loan products that are kind of common.
Sure. Yeah. Well, let's start with the best program out there, and that would be VA. If you're a veteran, you get the best of the best. Best rate, best, everything, best terms, cheap. No mortgage insurance. There's a lot of benefits to a VA program, um, and that's just hands down the best program out there. The second best program after that is going to be USDA for a lot of similar reasons. They're both zero down programs. With USDA, very cheap mortgage insurance, and cheap fees all around. The problem with USDA, just like VA, you're limited to having to be a veteran. With USDA, you're limited to properties that are considered eligible territory. And so, what I would recommend is anybody watching this, you can type in Google right now USDA property eligibility map, and you can use that search function to discover which areas are eligible and ineligible in the state of Minnesota. But I can break it down for you pretty simply. There's about a 30-mile radius around the Twin Cities that's all ineligible. So basically, the way that it works is any densely populated cities or areas are going to be ineligible. And the whole idea with USDA is, a lot of people think, well, USDA rural development, and they're not really sure because USDA, it's associated with, meats and all kinds of
Yeah.
different things. So it's kind of confusing to the consumer. It has nothing to do with farmland or, rural development. It has everything to do with less populated areas. And so it's just the way that the government's encouraging people to move out of the cities and come to these less, densely populated areas to, encourage them to start families there. And so there's a lot of eligible territory in Minnesota, with a few exceptions of, like I said, the 30-mile radius around the Twin Cities, Duluth, Mankato, Rochester. Those are kind of the only areas that are ineligible.
Yeah. And it's crazy how quickly I think Elko, new market for those local people, is growing just because of those. It's more affordable for first time homebuyers,
Mm-hmm.
which is exactly what the program is trying to do.
Right.
Yeah. So then what? Conventional FHA?
Yeah, then conventional FHA. I would say conventional is definitely better than FHA. And, some could argue that conventional might be better for you than USDA, at least in the regards of, it's a less strict appraisal process. And so, in the eyes of a seller or listing agent, they like to see conventional loans come through because that means it might be a little, less strict, much more straightforward in terms of, getting the funding through and not having to deal with any, additional contingencies.
Yeah. So are USDA appraisal rules pretty similar to VA and FHA?
Yeah, I would say all those kind of get grouped into the government programs, which
Okay.
are all kind of have that similar appraisal process.
And can you talk on that appraisal process a little bit?
Yeah. So, when it comes to the appraisal, first time home buyers, they don't know, the first thing about it. And so let's just start with there. So an appraisal you're going to have two kind of inspections, let's call it, or reports. And you're going to have that inspection report. Not everybody gets it, but a good realtor will negotiate you an inspection. When it comes to these multiple offer scenarios that we're seeing right now, it doesn't always happen. But that's different than what an appraisal is. Appraisal is going to be where an appraiser comes in and they're looking to get the value of the home. They're not looking for, all these little, nicks and this, that, and the other. But they do want to make sure that it's safe from a hazard standpoint. And so that's where the government appraisers come in, and they're going that extra mile to make sure that all of the safety requirements are checked off. And so those will be things like, chipped paint, making sure like a guard handrail is in place on all the different various staircases. They're gonna make sure that all the outlets are covered, and they're really gonna go that extra mile to make sure that everything is safe and sound. And so sometimes that can pose an issue. Typically, in my experience, FHA, VA, all the government appraisers, they're all pretty flexible when it comes to trying to get them to sign off on everything. And it's really more so just kind of like a listing or I would say a seller's kind of like, they if they think that something's seriously wrong, then they might kind of stray away from a government loan. But 9 times out of 10, there's usually not that many major issues, and if there are, you can typically escrow, or in consumer terms, you basically just put some money in an account, so that, well, actually either the buyer or the seller can do that. It's negotiated, but
Mm-hmm.
that money, then you can actually close on the loan on time, and then you pay that repair off over time.
Yep.
And so that's kind of how that works. But yeah, I feel like I'm just kind of rambling on about these appraisals, but
No, I mean, that's stuff that people don't know. And because that's probably one of the most time consuming things that I go over with buyers, is explaining it. Well, and sellers too. Because in this market, us real estate agents have to be careful how we advise on pricing of a home, or even accepting an offer, $50,000 over ask. We have to either secure an appraisal gap guarantee on that, which, for people that don't know, if you pay over a certain amount and let's say it doesn't appraise at that value, you either have to renegotiate or someone's going to have to cover that cost in cash. So with sellers, there might be one that's, sellers always want the top dollar. That's generally their biggest concern. Next is a lot of times, when can they move? But they have to be careful, because it's like, hey, that one might be $60,000 over ask, but the terms are a little shaky. This one's only $40,000 over ask, but great terms, and more than likely it'll appraise at that amount. So you kind of have to, know your comps, know the area. Will it appraise at that value? Because you really don't want to renegotiate when it doesn't. So go the one that has strong terms. So appraisals are always kind of an issue that you need to look out for. And I know there are some buyers and sellers that feel a little blindsided when appraisals haven't really been explained to them by their lender or their real estate agent, and they get to that phase and they're like, well, it appraised at $20,000 under what you offered, and then there's like, what does this mean now? It's like, well, now we gotta renegotiate, or you have to have $20,000 in cash, or we got a dead deal. So
right.
So this is all good information.
Yeah.
I know you talked about different assistance programs. So they're helping people get down payments? What are we looking at?
Yeah. Typically, we're looking at just a straight up down payment assistance loan. There are grants out there that float around. Typically, those funds are used up right away at the beginning of the year. There's not a whole lot allocated for grants, but these down payment assistance programs, there's all kinds of different ones for the various cities and counties. And Minnesota housing, I will say, is the easiest to qualify for typically, and so that's why you'll probably see that most commonly. There's they have pretty loose guidelines and higher income limits when it comes to some of these other ones that are a little more strict, or a little more picky when it comes to choosing who they're gonna give their funds to. And but there's just so many of them. And I would say Minnesota, on average, the state of Minnesota has some of the best down payment assistance programs in the nation.
Yeah, I think that's true as well. And it's funny, the more I get into investing myself, all of my buddies now think they want to do investing too. And we talk about it more. And it's funny because through down payment assistance programs, other funding programs, tax breaks, the government wants you to own property. Like, the government sees people owning property as a good thing. So they really do try to get you into properties. So, and I think it's a great thing to take advantage of.
Oh, yeah.
what other investment out there is the government trying to get you to take?
Mm-hmm.
It's really just real estate. So I think that's always great when people can get involved in that.
Mm-hmm.
Um, so big thing, I think one of the top things buyers talk to me about when we're talking about buying a home, credit score.
Mm-hmm.
So give us a little, I don't know, background on credit score. Like what are you looking for with the credit score and different programs like that?
Yeah, I would say so for the state of Minnesota, or let's just say Minnesota Housing Finance Agency. They look for a minimum FICO of, it's technically 640, and I always start off with the technical part of it. Even though it's technically 640, you're not really seeing anybody get approved with the 640 FICO. 650, on the other hand, that's the minimum for FHA.
Okay.
So the minimum for a conventional Minnesota Housing Financing Agency is uh, that 640 that I talked about. Well, if you're 640 trying to go conventional, you're that low for a reason. It's probably some derogatory trade lines, late payments, what have you. And so for that reason, you're not going to get approved at 640 conventional. So really, I say 650 is the minimum FICO requirement for a lot of these down payment assistance programs. But Minnesota Housing Finance in particular, it's going to be at 650, and then if you can get to 660, which is even better if you're trying to get approved for more, you will then be able to get approved to up to 50% debt to income ratio. And I'm probably speaking a different language to some first time home buyers out there, but it's important that you can get to at least 660, especially if you're trying to get that extra 20 50,000 on top of that approval to afford more. And so that's really the numbers. Those are solid numbers, 650, at least for down payment assistance and FHA. But you can actually go as low as 500 for FHA. And so not a lot of people know that, is that you can go as low as 500. Now, obviously, 500, you've probably got a pretty shitty score, and you probably got a pretty shitty score for a reason.
Yeah.
And so because, FHA is like, yeah, you can get your foot in the door at 500, but we need you to put down 10%. And so between 500 and 580 FHA, you have to put down 10%. If you can get up above 580, now you can put down at a minimum of 3.5% for FHA. And that's really going to be kind of your lowest tier for a lot of buyers that you're going to see. Because, if they have shitty credit, and, if you're a first-time home buyer and you got a 500 credit score, you probably don't have much saved up either. And so you're probably not going to have 10% down.
Yeah.
And so a lot of the times we're seeing 580 is kind of the floor for FICOs in general, at least for FHA approval. And then 620 is going to be the minimum for conventional, FHA, conventional VA, and typically USDA, technically it's, down there too. But really, if you want an automated approval for USDA, you need to be at 640. And so those are kind of like all the minimum, FICO thresholds that we talk about with our buyers. But there's even a no FICO program out there too. So if somebody is fresh out of college, this is something that was actually fairly new for my company, and really just kind of across the board for a lot of people out there is, there's no FICO programs now.
Mm-hmm.
And so, yeah, there's that opportunity too, is, but again, you got to put more down. And so there's extra, stricter guidelines for no FICO approval, but, it's available for those people that are, they thought, some of our parents taught us that, if you can't buy it in cash, you can't afford it. And that's generally a good rule of thumb. I would say a lot of our parents that told us they were giving us good advice. But in terms of, building credit and, the current model of, the credit score and how it works, and how society works these days, is credit's very valuable. It's very important to establish that early on. And so, my advice to all of you 18-year-olds or 17-year-olds out there, people that don't have any credit yet, is when you turn 18, it's important to take some of those steps to establish credit, like, opening up a few credit cards. You might have a student loan if you're going to college. Ask your parents, can I get set up as an authorized user on some of your trade lines, on some of your credit cards? Those are all really good things that will set you up for success later on in life, when you do want to purchase a home.
Responsibly, open those credit lines responsibly. And yeah, we could do a whole episode too. Maybe we'll have to come back and just visit building credit, because I mean that was something when I don't think I got my first credit card till like I was graduating from college or in the middle of college, because yeah, I didn't have one in high school. It's
Mm-hmm.
which is a huge low limit credit card that you like put your gas and groceries on and pay it off right away. Great way to build credit when that's like your only trade line.
Mm-hmm.
But yeah, so anything else, like I'm sure common things you get a ton. Anything we missed, like common first time home buyer
Yeah. Yeah.
misconceptions?
Let's talk about, fees and, what it takes to take a mortgage application. There are no fees. And so a common misconception is, I just don't want to, pay any money. Like I'm broke right now. Like how in the hell am I going to, afford to buy a house if I've only got $2,000 in the bank and, I'm supposed to, how do I even get started, And so that's a big misconception is that, they need to pay for the mortgage application process, and B, they need to pay a buyer's agent, right? And so that's simply not the case. You and I both know that they're not paying you as a buyer's agent. That's they're it's coming out of the seller's pocket
Yep.
essentially, and they're not paying me up front at least, right? So there's fees like credit report. It's like $13. You know, various application fees, but that's not due
Until you close on a
until
deal.
they close
Yep.
on the house. And so you're not obligated to pay that even. I could pull your credit today, and technically there's a $13 fee for that credit report, but you could never even use me as your loan officer, and therefore you'd never even pay for that.
Yep.
It's not until you actually get that accepted offer, and then obviously 30 days or whenever that closing date is negotiated, you're at the closing table, and then you'd be paying for that fee. And so yeah, that's a very common misconception because it's a big roadblock for initially to get that conversation started, because they think that they need to come up with some money or whatever you have you.
Yeah, and I know we've run into that together, and that's a
Yeah.
big, probably the number one thing that I get between like, yeah, I want to save on a house by not having a buyer's agent. Well, it's like the buyer's agent in Minnesota is free. The seller's that comes out of the seller's agent's commission. So
Mm-hmm.
buyers, it's free to you, and then that's another one. Yes, when you apply for a loan, you could take that all the way to final stages of a loan, and if you don't close on the house, you didn't pay anything.
Right.
So I think that's huge. But
Yeah.
yeah, other than that, any like closing?
I would actually like to bring up, like when do I get approved? I feel like that's a big common misconception. Some people will, they'll wait to they'll wait for their dream home to come on the market before they talk to a lender or maybe even talk to a real estate agent. And so, now they're on Zillow or whatever app they're using. They're like, oh, yep, this is what I want, and then maybe at that point, I might receive them from you or something. And they're like, yeah, they're gung ho, they're ready to go. They just don't have an approval. And so for me, I can turn that around pretty quickly depending on when that
And if it's
highest
a clean
invest is due.
file.
Right? And if it's a clean file, it can be a pretty quick turnaround time. I've had same day approvals, uh, plenty of times, but if it's complicated and we need additional documentation and the buyers just they say they're willing and ready to do anything and everything, but then when it comes time to get documentation, they might be dragging their feet, and that dream home slips through their fingers.
Yep.
And so that could be an issue. So when people ask me when's a good time to get pre-approved, I say yesterday.
Yep.
Because it's a good way to understand if there's any underlying problems with your loan, if there's any hurdles that we need to get over and address up front. I've had buyers come to me and everything says that they can get pre-approved for down payment assistance, yet they haven't filed their taxes the previous year or the previous 2 years.
Yeah.
And so, that gives them an opportunity to, at that point, file the taxes, because it's going to be a process. We need to get the tax transcripts, but it gives them an opportunity to maybe work on their credit or, do various things to improve their loan scenario.
Yeah, no, Drake, this has been great. Thanks for coming in. I appreciate your time.
Yeah, absolutely. Thank you for having me. Appreciate it.